Welcome to this discussion hosted by the Cape Chamber of Commerce and Industry, discussing the 2023 budget. It's the post-budget analysis webinar. Hopefully going to have an insightful discussion on the budget speech that was presented by the Minister last week, Wednesday, the 22nd of February. And outlining the key highlights for that particular budget, and also what we believe would be the economic impacts of the budget that was presented. It's been nearly a week that the Minister has presented his budget in Cape Town, and I'm delighted to have three very esteemed panelists with me this afternoon to take us through some of the highlights and to discuss the detail around the impact of this particular budget. So the three speakers that I have today, I have Mr. Hugo Pienaar. Hugo is the Chief Economist at the Bureau for Economic Research. He's a well-known macroeconomist, and he focuses his attention on the Bureau from Economic Outlook's publication, including other duties such as managing the BER's view to clients, media and foreign investors, and editing for that particular publication. He holds a master's degree in economics cum laude from Stellenbosch University. Good afternoon and welcome, Hugo.
Good afternoon. Thank you very much for the opportunity again.
Welcome. My second panelist is Professor Deborah Tickle. Professor Tickle is Adjunct Associate Professor at UCT. She has a wealth of experience as a chartered accountant and a tax expert. She's been in the industry for 31 years. Having been the managing partner of the tax department at KPMG, and also worked on various committees, including the Davis Tax Commission in 2015, as well as serving as the Southern Region and National Tax Committees of the South African Institute of Chartered Accountants. Good afternoon, Professor, and welcome.
Good afternoon.
And last but not least, Mr. Dawie Roodt, welcome. Dawie is the Director and Chief Economist of the Efficient Group, and he's also a well-known and nationally renowned economist with over 30 years of experience. He focuses mostly on monetary and fiscal policy, and currently doing research on the impacts of cryptocurrency on monetary policy. Welcome, Dawie. Good afternoon.
Thank you very much. Good afternoon to you and to my fellow panelists.
So I'd suggest for the format of this evening, firstly, just some housekeeping rules. Can I ask that for all of our guests to please have your cameras off and your microphones on mute for the duration of the session, unless prompted otherwise. This is just to ensure that we don't have any traffic in terms of the communication. My panelists will keep their cameras on. There will be an opportunity later in the discussion to have questions and answers, and at that point, if you are prompted, you're welcome to take off your camera and then unmute yourself. But welcome and thank you to the Cape Chamber for hosting this discussion, and I look forward to it. The format of the discussion is that I'll first ask each of the panelists to give me 10 to 15 minutes highlights of their particular findings and observations from the budget. We'll then have a 30 to 40 minutes discussion where I'll try and prompt them on some of the key themes that emerge from the highlights. And then in the last 20 to 30 minutes, we'll have a question and answer open to the floor for discussion. So I'd like to start with you, Hugo. Last time we spoke at the pre-budget webinar, you had some observations around potential forecasts for the budget. It has now been tabled for this financial year. What are your observations around what was tabled last week in terms of your macroeconomic forecasts from the BER perspective?
Thank you. So yeah, I mean, as always, the budget is a mouthful. There's a lot that one needs to work through. So perhaps let me start by just setting a bit of the macro scene and perhaps the starting point for the budget, and then delve into some of the details. Because I mean, I won't take 10 to 15 minutes. I mean, obviously Dawie has a lot to say about it as well. But so, you know, we go into this budget, and although there was a lot of commentary before the time that the minister has very little wiggle room, in fact, the minister did have a bit of wiggle room. Relative to the budget last year, we're sitting with a revenue overrun. In other words, the minister or the Treasury, sorry, not the Treasury, the Revenue Service collected more than 90 billion rand, or about 90 billion rand more in tax revenue than we thought this time last year. At the same time, we've spent a bit less than what we thought. So the combination of that now gives us a primary, in other words, if you exclude payments for interest, we're now budgeting for a small primary surplus in the current fiscal year, the 2022-2023 year. Now you have to go back, I think it is 2007, I think, the last time that we had a primary budget surplus. Now, of course, we do spend a hell of a lot of money on interest. So if you include the interest, we of course do not have a surplus. But still, it is a fairly significant achievement to get back to a primary budget surplus. So that's a starting point, which is actually quite a positive starting point. But then, of course, if we look forward, growth forecasts for South Africa have been downgraded the last couple of months. So the outlook is not particularly great. The Treasury themselves have downgraded their real GDP growth forecast for this year. One may argue whether they've gone far enough. So they're now sitting at 0.9% growth for this year. Now, just before we all jump up and criticize the Treasury, that is in fact exactly what the current market consensus is for growth this year. So the Reuters Econometer consensus for February is 1% real GDP growth. Now, personally, I think that is too high. At the Bureau, we're sitting at 0.5% for this year. The Reserve Bank is at 0.3%. But, you know, we can perhaps debate that a bit later. The point is, it's not like the Treasury is out of kilter with the current market consensus in terms of growth, although I expect that to move lower over time. Okay, so it's a bit more challenging going forward. There are questions about the revenue, these commodity price windfalls that we've seen over the last couple of years, which again helped us last year, and to an extent, along with the financial sector and the manufacturing sector, sort of gave us this revenue overrun. It's not obvious that those windfalls will continue going forward. Then, of course, the big story in the budget, and something that we spoke about in our preview session, was it was always going to be all about the electricity crisis, and then Eskom in particular. And what does Treasury do in terms of providing a quote solution for Eskom's debt problem? Now there they did do quite a lot. They are saying, look, we're going to basically provide 254 billion rand worth of debt relief to Eskom over the next 3 years. We can perhaps delve into the bit of a detail on that a bit later. For now, I'll just give you the headline number over the next 3 years. But what they've done is they have said these debt payments, let's call it debt payments, they are not adding that to their non-interest expenditure. So they're not seeing this as expenditure item, they're seeing it as a balance sheet operation. The implication of this is that these funds to Eskom does not push up our budget deficit, but crucially, it pushes up our debt. So if you just look at the budget deficit numbers over the next 3 years, those look quite optimistic. And in fact, we continue to budget for surpluses, for primary budget surpluses. So again, if you just look at that, you say, fantastic, this is real proper fiscal consolidation. But actually, that is not the full story. You actually have to look at the overall government debt metric, and that is now substantially worse than what we thought only 3-4 months ago in the October fiscal statement, because we are now providing this debt relief to Eskom. So our debt now stabilizes later than we thought at the time of the October statement, and it also stabilizes at a higher level. I think it's around 73.5% of GDP. So I would say that is actually the main part, or the main story here. Not so much the budget deficit, but our debt. Now, why is that the main story? Well, because it implies that we're going to have to borrow over time more than what we thought before. So the borrowing requirement of government has now gone up. So I think that is sort of the main sort of announcement from the budget. I think it is a positive announcement from the point of view that I think we all know that Eskom's debt load is simply not sustainable. So the idea here is, and certainly the hope is, that if you provide this relief to Eskom, they will now have more funds to use for capex, for maintaining the existing coal fleet, which has been a problem up till now, and crucially, more funds to be investing in the transmission and the distribution infrastructure that we desperately need in order to enable all of the green energy investments that are now taking place, to be able to be connected to the grid. So there's a lot of investment that Eskom needs to do. If you now lighten their debt load, the thinking is that they will be in a better position to do that. And also, we are not just throwing this money at Eskom. There are very strict conditionalities attached to that. So to an extent, the Treasury is going to play a much bigger role, I think, if of course they can enforce these conditionalities. That is perhaps a question, but assuming they can, they are now going to play quite a big role in transforming the energy sector in South Africa, and the way that they're trying to do it, I think, is also quite positive. So we had to deal with Eskom's debt. They have now done it to a large extent. So yes, it does push up our overall government debt, but I don't think we had a choice in the matter, really. So I think it's a positive step that they bite the bullet on that. Now the question is again on how do you enforce those conditionalities. How am I doing for time? I guess I still have a little bit of time. We probably have to say something about taxes. Going into every budget, people look at taxes. So there's always a bit of, and I know Dawie has spoken a lot about this in the past, there's always a bit of sleight of hand here. The minister tells us that he's giving us, and perhaps Deborah will also speak to this, the minister is telling us that he's giving us 15 billion rand worth of tax relief, which is of course not really the case. It is a counterfactual exercise. So in other words, the Treasury is foregoing 15 billion rand worth of revenue. So if they did X, Y, and Z, they would have gotten 15 billion. They are now not doing that. So we are saving this 15 billion as consumers. But in fact, if you go and look at the tax bracket, and the Treasury tells us they've adjusted the tax brackets in line with inflation, but their inflation is 4.9%, which is not inflation. So if you got a salary increase of 5.5%, for argument's sake, this year, you will be paying more tax. So we just have to, I think, be clear about that. At very low salary increases, yes, you will not be paying more tax. In fact, you may even be paying less tax. But I mean, you really have to go down to, less than 5% salary increase. Then, then you actually get a benefit in terms of personal income tax. I think what is positive is that the fuel levy was not increased. I know it is a administratively good tax, and it's sort of a user pay tax, but given what has happened to petrol prices, etc., I think that was a reasonable move. So I think all in all, and then there was some incentives for solar panels, etc. I don't think the household incentive will do that much. The business incentive does look quite juicy. Actually, 125% that you can get back on solar investments. I think that that may well have an impact over time. Okay, thank you. Let me leave it there. I think that was sort of, for me, some of the highlights.
Thanks, Hugo. That's excellent. Thank you. And we'll talk a bit later about these mechanisms that have been put in place to address the Eskom debt, as well as whether this does enough to deal with the energy crisis overall. And I'd love also in our question and answer session to ask some of the businesses online whether the incentive, the business incentive, that tax incentive, would actually stimulate more investments in that area. Can I hand over to our second panelist, Professor Deborah Tickle, to talk about her highlights from last week?
Thank you, Mbongeni. And Hugo, yes, I agree with everything you've said. Obviously, you covered mainly debt, but that was actually the first thing I wrote down when I was busy listening to the budget speech and making notes from the review. My first words, and I'm reading from my notes, was disappointing, really increased debt. Because of course, what comes with increased debt, of course, is increased interest. And my concern with this is that they've pointed out that by 2026, we'll have around about 400 billion rands worth of interest, which if you then add that with the public sector wage bill, which we hope won't be what they say, but they've estimated around about, or just under 800 billion, then you're getting to almost 60% of the total estimated tax revenue, which they estimate to be 2 trillion. Is somebody speaking? Can somebody switch themselves to mute, please, Leanne? Yeah, sorry, it's just difficult to think when people are talking. So yes, so the total tax income they're estimating is 2 trillion by 2026. So you're looking at 60%, which doesn't leave a lot for other items. Now I'm going to put to the other two panelists, who are the economists, for after I've spoken, the question that we are sitting in 22-23 with 1.7 trillion rands worth of tax revenue, and that's budgeted to increase to over 2 trillion by 25-26. That's a 20.7% growth. They're estimating GDP to go up by less than that, about 19. But I'd like to know where this tax growth is coming from, because the debt that we are talking about is entirely dependent on us having other income in other places. So we've got, in my view, we've got a very optimistic outlook for the future of the tax take. And just to sort of reiterate the point that was made by Hugo about the the commodities windfall, presumably we're relying on the deterioration of the rand for it to continue, because I went back to 2020 and the commodities royalties in 2020 was 11.8 billion. Now we were very lucky in 2023 to get 25 billion rands worth of royalties. Okay, they're increasing the oil and gas royalty, but I don't really believe that this is sustainable, and I don't think anybody else does. So it's not going to come from there. I, before the budget, had a look at, what could Minister Godongwana do with taxes, because obviously that is the place where all the revenue comes from. And the majority of the tax comes from personal income tax, 39% of it. But if you go down to the 2022 statistics that are issued by Treasury and SARS, you get some very revealing information. The first thing is that the composition, 39% comes from personal income tax, 26.5% from VAT, and then obviously there's corporate income tax, which is, hold on a second, I'm going to give you the right amount. Corporate income tax is at 18%, and then the other customs and excise, your fuel levies and other. So mainly you're looking at personal income tax. How many taxpayers do you have? Well, you have a lot on register, but how many of them pay tax? Well, actually, a very, very few. About 5 million people are actually physically paying tax, but how much are they paying? If you go into the bracket of over 500,000 rand taxable income for individuals, there are just over 1 million people. And this is before COVID. So it's based on 2020 figures. That's the latest they have. So things will have changed, but not significantly. So you're looking at just over 1 million people. They pay 72% of the tax from the personal income tax. So you're looking at 1 million people of 60 million people. That's just under 2% of the total population paying all the tax, or not all the tax, a significant amount of the tax. They too are the spenders, because obviously if you've got a job, and as I said just before the budget, I was interviewed, it is a privilege to pay tax, even if we are disappointed with how it's being spent. And we've been hearing about how some of that money goes into the trough, the feeding trough. Even if we're disappointed to be paying tax and where it's going, we are privileged if we are in a position to actually earn money to pay tax. But the point is that 1 million people are probably paying the majority of the VAT. So you've got a very small base, and the room to increase that tax was very, very, very small. And the minister recognized that. He also said in the review, thank you, Dawie, you put up some figures, so presumably you'll reiterate what I'm saying here. But he said that they've looked at, the UN has looked at increasing taxes, and when you're in an economically frustrating time, you cannot increase taxes. It tends to diminish economic growth. So he did a very good thing by not increasing taxes. In fact, he so-called gave some relief. But this point about how many people we have, we talk about the emigrants. Over the 2017 to 2020 period, we had 43,000 people leave South Africa, and they paid 3.9 billion rand in the year they left. That is gone forever. So this country has to do something to, A, increase the tax base, which means more people, more jobs, and retaining people. So making ourselves much more attractive. We haven't got room to increase the taxes, as we've seen. So we have to spend more efficiently, and we're not very good at that. So that was, I felt positive but disappointed with this growth in the debt, but then there's not much room. But then I don't believe that it's going to be that little, and that what we spend on is basically interest and government departments. In the sonar, the president did say that there is going to be a rationalization program of government departments, but I'm sorry, I'm a little bit maybe cynical. We've heard that before. They're going to have to do something quite dramatic on that. So I'm not quite as positive. I do think that, as you said, Hugo, some of the reliefs, and I will come back when I speak again to, you know, who actually did benefit, as you say. It was the poorer, as it should be. But the wealthy, the people will say, oh, you should have introduced a wealth tax. And Kieswetter has said quite distinctly that there isn't a wealth tax on the cards in the near future, although that doesn't mean it's off the cards later. But the wealthy are being significantly taxed, and I can talk about that later, about how that's been that tax on the wealthy has been being increased over time. And quite frankly, the solar panel, it's a token gesture. Very nice. And nobody's going to sneeze at 6,750 if they spend their whole 60,000 on solar panels, or if you're a couple, it could be double. So nobody's going to sneeze at it. But quite frankly, anybody who wasn't going to put solar panels in isn't going to be incentivized to put solar panels in with that amount, because as I understand it, to put in solar panels that will sort out your problem, you're looking between 100, this is with all the other stuff too, not just the solar panels, but to make it work, you're looking between 150, 250,000 rand. So the little bit that they're giving you isn't going to make you buy solar panels. You were going to do it anyway, and this is like a token gesture. I'm going to stop there because I feel like I've talked quite a bit more about the debt than about the actual taxes. I've got quite a lot to say about other things that they're doing, but I'd like Dawie to have an opportunity to reinforce what I'm saying, because I can see he was smiling and putting up some nice graphs which do that. So I'll stop now and we can come back later.
Yeah, thanks, Professor. And I think you've made a very good point around this issue of the thin tax base, and the fact that the projections suggest that taxes will increase, but the question is where would those tax revenues come from? And if there isn't a concerted effort to actually stimulate growth, ultimately there's no prospect for a larger tax base unless you do something dramatic like a wealth tax. Maybe later on we'll discuss the feasibility of such things, if any.
Can I maybe just add one thing, which is based on what you're saying? So the South African Institute of Chartered Accountants did an exercise where they looked at the tax collected in 1996, but at current, real terms versus today. And if you look at what we collected in 1996 versus today in real terms, we collect 5-fold the amount we collected in 1996. So the problem isn't the amount we collect, the problem is what we spend and how we spend it. Looking more and more to the taxpayers is not solving the problem. They've been increasing and increasing and increasing. And as Hugo said, it's, you think you're getting a benefit, but you're not really. That increasing of taxes is not the solution. It's the expenditure, which unfortunately Treasury can budget for the spending, but they can't spend it for the people. So it's a kind of a bit of I remember the Jaws, the Tito Mbongeni's Jaws. But let me hand over.
Thanks for that. Let me hand over to you, Dawie, for your highlights.
Yeah, thank you, my fellow panelists. I think they've covered just about everything. So it's now up to me to see if I can dig out something else that they haven't looked at already. Maybe the last point that you've made, Deborah, about the increase in taxes, that is, of course, that is correct. But I think that's a bit of a wrong approach. And the reason why I say so is because the economy increased in size as well. So relative to the size of the economy, that is rather a better way to look at it. And if you look at it that way, then you will see that I can't remember exactly, but I think we probably increased the tax burden on the economy in total from about 1960 to today. It probably increased, it doubled basically. Roughly the numbers are that the state collects about 30% of GDP today. It's a little bit less, but 30%, while it was just less than 15% in 1960 or 61, somewhere there. So now, as always, you can play around with numbers. Okay, I just want to make another comment, and you mentioned also the wealth tax. And people ask me, and one of the first questions that the press usually ask you, is this a pro-poor budget? And the answer is yes, it is always a pro-poor budget. All budgets are always pro-poor budgets. For one example is that 60% of total state expenditure goes to social expenditure. And we can go through. I think Hugo mentioned a couple of those expense items. All right. So what is the context here? And I think the context here, and very importantly, and you highlighted that, Deborah, and I absolutely agree with you, is that I can't see the economy actually being capable of supporting this kind of tax increases tax contribution to the fiscus over the next couple of years. That is a major, as far as I'm concerned, the single biggest threat to the budget, and that the economy, I think, will not be able to support this kind of state expenditure. Hugo, you mentioned a 0.5% increase. I'm not going to argue with you, but I am very concerned about economic growth. I've done some numbers based on a stage 2 load shedding, and that indicated to me that the economy is limited to about 1.5% growth. And now we've got more 5, 6, 7% level, whatever, pick a number, nobody knows what's going on. And that I can quite easily see that we can see the economic growth go to 0 this year and even below 0. In fact, if we look at the leading indicator of the Reserve Bank, that is turning down. And that is usually a good indication of what can be expected on economic growth. So that is the biggest threat to the budget. Then, so did the Minister of Finance did he do a good job? It makes me think of somebody playing in a sandpit with toys. But all his toys are broken. There are a lot of them. There's no single toy that is not broken. All the toys. Toys in terms of economic growth, toys in terms of where the money is coming from, toys in terms of where the money is going to, the debt levels, all of that. So he did, I guess, as good a job as he possibly can, but all his toys are broken. And I must also say that I think, and I will end up with a few things about ideology, which is very interesting to me. But I think that Mbongeni is certainly the best that the ANC can offer as a Minister of Finance at this stage. All right, coming back to some more specifics on the revenue side, a few things that stood out for me. No real tax increases except for a bit of pulling the wool over our eyes, but no real changes on taxes. I thought the minister, and as far as taxes are concerned, I thought he's going to increase the fuel levy. And I understand where you come from, Hugo, but the fuel levy, if you want more money, the easiest way to get more money, the cheapest way is simply to increase the fuel levy. But of course, we've seen some substantial increases in petrol prices recently. Then there's some relief on the solar panels and all that, and I agree with you that it's just a symbolic relief on some. And I do not agree with that, by the way. Very importantly, do not use your tax system to get people to do stuff or not to do stuff. Try to keep your tax system as neutral and as less complicated as possible. So that's on the revenue side. On the expense numbers, we have today about 30 million people now receiving grants from the state. In total, including the civil servants, which are mostly basically grant recipients, let's be honest. So they're demanding another 10% increase, and that's another threat to the budget. And that is the Minister of Finance is penciling 3.3% in wage increases for the civil servants. I can't see how that is going to happen. They are demanding a 10% increase. They've been getting a well above inflation increase the past 10 years. Last year, they got a 3% increase. This time, the minister says 3.3%. But even if he gives them a 3.3%, they will still be over-remunerated compared to many other things. Like, for example, I've just received some numbers, and that in nominal terms, not even in real terms, in nominal terms, salaries are falling in South Africa today. So it just goes to show and we've lost 2 million jobs in the private sector, and subsequently we've regained some of those jobs, but we are still some 600,000 jobs below pre-COVID in South Africa. Not one single civil servant lost their job in South Africa. So that's another major threat to the Minister of Finance. So biggest expense item is education, is the biggest wasteful item as well. If you compare our education outcome with many other countries in the world, it is absolutely horrible. The second most important expense item here are these various grants by the Minister of Finance. But the plan is, of course, to stop the COVID grant in a year's time, which is also not going to happen. But if they do stop the COVID grant in a year's time, then in a year's time, interest on state on debt will be the second most important expense item to the Minister of Finance. So if they succeed in that, if not, interest will eventually become the second largest expense item in any event because of the high levels of debt. So that's on I think the most important expense items. And then on the deficit, of course, the deficit and the debt levels, I'll get to Eskom just now. They are, like I've said, the economy is important for two reasons, economic growth. The one is that you provide revenue to Minister of Finance, and the second one is that we use the economy or GDP then to calculate certain ratios like the deficit and the debt ratios, which are very important to rating agencies and so on. So with a smaller economy, smaller than what the Minister of Finance expects, those ratios are probably going to move in the wrong direction. So I'm a little bit concerned about, not necessarily in the current year. I think there's a little bit of momentum still for things like, for example, the commodity cycle. Well, that cycle is certainly cooling off. And I don't think we're going to see this 100 billion overrun in revenue again. But don't take away from SARS. SARS is also getting much more efficient in their collections, just by the way. All right, coming to the deficits, yes, we're running a fiscal surplus, which is good. It's an indication that the Minister of Finance is actually quite successful in keeping a lid on discretionary spending, which is important to understand. That is a good thing. That the minister, but the reality, a deficit is a deficit. And if you're running a fiscal deficit relative to GDP, which is below economic growth, then your debt to GDP ratio will keep on going up. Okay, come back to Eskom. Just a few comments on Eskom, and what is happening here is really, really interesting. Now, this is, you can't only look at the budget. This can't be just a budget discussion. You have to look at this whole Eskom debacle, and you have to include Moderator's bombshell the past week and the announcement by the president about the electricity minister and all that stuff and so on. So, but here's what I see is going on, and this is this is really interesting. So we have a lot of people responsible for electricity in South Africa. The deputy president, by the way, like our current president, who was previously personally responsible for the war room at Eskom, our deputy president today is responsible for electricity. We have the Minister of State-Owned Enterprises, which is responsible for state-owned enterprises, Pravin Gordhan. We have the Minister of Energy and Mineral Affairs, Gwede Mantashe, which is responsible for energy. Then we have a committee responsible for electricity in South Africa. Then we have now a new Minister of Finance, or rather Minister of Electricity, that's going to be responsible for electricity. Okay, so nobody is responsible for electricity, but everybody is, apparently, kind of. Ooh, I don't know what the Minister of Electricity is going to do. But Gwede Mantashe, see what he believes. He believes that the private sector should not be involved in electricity generation. He was kicking and screaming, increasing those limits on how much the private sector can generate. He is in favor of coal, and he is in favor of these power ships, for example. That's his position. So he does not want the private sector to participate in this. Pravin Gordhan, my goodness, he fine-tunes his involvement in all the state-owned enterprises. Pravin Gordhan, under his watch as Minister of Finance, the state finances started this collapse that we're currently experiencing. He was a horrible Minister of Finance, let's be honest, and he's a horrible Minister of State-Owned Enterprises. He's a real ideologue. All right, that's important to understand because some other stuff is happening here. Then we have the Minister of Finance, Ndlovu Ndwala, and this is what I take away from what he said. He said he is going to privatize Eskom. I'd like to repeat that. He didn't use the word privatize, but he said we are going to privatize Eskom. Firstly, he said we're going to make use of international guys to come and check what's going on and give us advice on what's going on in Eskom. And that means that there's a vote of no confidence in his own government. His own government hasn't got the capacity and to figure out what's going on at Eskom. We know what's going on at Eskom, firstly. And secondly, one of the requirements for before he takes over the debt of Eskom is that you have to privatize the operations at the various coal-powered stations. That is privatization. So what is happening, and that's what the Minister of Finance thinks. Now, my question is now, so what is policy in South Africa? Is policy actually privatization? No. Is policy no state in private sector participation? What is real policy? And the answer is, I just don't know. In the meantime, the president must announce his new cabinet. He cannot announce the new cabinet because apparently some of the ministers are fingered and are being involved in some sort of corruption activities at Eskom. So whoever he announces now as the cabinet, he's running the risk of including some cabinet ministers that could be involved in Eskom. What a complete and a total mess. I don't know what to say about this. This is a government that's running around like a chicken without a head. I haven't got a clue what policies are. I don't know where they want to go to. I don't even understand the ideology of the ANC. This is a complete and a total mess. And that's what I said. The Minister of Finance's toys are all broken. He's got all these broken toys. He's sitting in a sandpit, but he's doing as well as he possibly can with all these broken toys. But I cannot see that we are actually going to stabilize. Not with currently what is happening with government and with the various numbers. I cannot see how we're going to stabilize these debt numbers. And by the way, I'm not against that. If I was the Minister of Finance, I would have taken over all Eskom's debt, all of that, because it's your debt in any event. And not only that, I would have get private sector participation. I would have sold off the assets of Eskom, and I would have done all these other things that we all know is the right approach. So the thing is that the ANC always tries everything, but eventually they decide on the right thing to do. And that's what they've done. They ran out of options, and they haven't got a choice but start doing the right thing now. And the right thing is to get private sector participation and to basically privatize the state-owned enterprises. The same way they've basically privatized the airways in South Africa, and they're currently in the process of privatizing the post office as well. So if you want something, you do it yourself. Don't look at this government. They're not going to provide the stuff that they're supposed to be doing. I guess that's enough.
Thanks, Dawie. And I mean, I appreciate the comments, because I think you're triggering one theme that so we've all mentioned a bit about debt, and we've mentioned a bit about Eskom. I mean, my main concern here is, so if Dawie is to be believed, taking on this debt creates a pathway towards privatization, which is essentially what you're saying. There could be another observation, which is, more states ownership, and in fact, there's a concept in economics, moral hazard. You're not dealing with the root causes, but you're taking up the debt of Eskom. One of the key issues that constrains Eskom, for example, is the municipal debt, and rather than disciplining municipalities, we're just taking on that debt onto the balance sheet. So, this approach, how confident are we that this approach is leading us to a path of more rational management of state-owned enterprises and creating more private sector opportunities? I think that's my one question that I'd ask to the panelists. Dawie, you want?
Yeah, I just want to add something, Mbongeni. I just want to add something. The president, he made two comments about Eskom the last couple of weeks. The first one was when he said that Soweto's debt must be written off. Now, that is an irresponsible thing to do. It is a highly irresponsible thing to do, because what about the other municipalities that owe debt as well? So the president coming in, and Eskom is in trouble financially. We all know that. Why did he say that? Is it because of politics? That's my suspicion, by the way. The second thing that the president said is that Eskom should not implement NERSA's increase. No, I don't think NERSA should even exist, just by the way. But that's the current system that we have. How on earth can the president say that? How can he say, listen, we're not going to give 18.2% the recommendation? Where's the money then going to come from? I mean, how on earth is he saying stuff like that? Is it because of politics, because of the election? Yes, indeed, that's why.
Yeah, and he has no mandate to say that. Hugo, the question, are we on the right track to deal with the energy crisis based on the interventions?
So, I mean, you've now touched on it already. So the debt relief from Treasury is a very necessary and welcome part of it, but it's only one part. Then we need to deal with the municipal debt, and Eskom needs so-called cost-reflective tariffs. We hate this, right? We don't want to be paying 18% more for electricity, but unfortunately, that is the reality. That is what Eskom requires to be sustainable. So I fully agree. It is highly irresponsible from the president to say that they should not implement it and to write off the debt. And of course, we're 12 months from an election, so there's we all know why the president is saying these things. But But so what we did in the budget is, as I mentioned at the start, is very welcome. It was very necessary, but it's not the end of the story. Now we need to look seriously at how are we going to handle the municipal debt, and Eskom needs to get this 18%, which they will. I mean, the president can't intervene. This is the independent regulatory authority. They've made their decision, and Eskom is going to go ahead and implement that increase. I have little doubt about that. So to answer your question, it's not that, no, we haven't solved the energy crisis by a long shot. We are now starting to do the right things. But it's not the end of the road. What is now happening concurrently is, of course, that the private sector is now starting to invest significantly in alternative power sources, the mines in particular. But this takes long. So here's another thing that we need to do. We need to seriously remove those bottlenecks, whether it is to speed up environmental approval, speed up water license granting, whatever the case may be, to make it even easier for the private sector to deliver these projects, not in 18 or 24 months' time, but quicker than that. Because, of course, if you start construction, it takes 18 to 24 months. But before you can get to construction, you need all of these approvals. So I guess the point I'm trying to make is there are a number of strands running here at the same time, and all of these things need to get together. So Eskom needs to do maintenance on the existing plant. They need to invest more in transmission distribution. At the same time, the private sector is busy investing. But all of these things are going to take time. So there's no way that we can solve the energy crisis over the near term. It's simply impossible. You can't. But what we need to say is, what are we putting in place that in 18, 24 months' time, we get to a space where we no longer talk about stage 6 load shedding. We should not be talking about load shedding at all. But as I say, there's lots of different things that need to happen to make that possible over the next 2 to 3 years.
Deborah, any comments from you?
Yeah, I liked Dawie's analogy of the sandpit. I'd actually said that I see Minister Godongwana as like the sort of head of a household who earns all the money and then he's got to distribute it. He doesn't earn it, quite frankly, he is given it, but he has to distribute it, and he's got a load of naughty children who don't do what they're supposed to do, and clearly the president is one of them, offering to give away write off debts which he shouldn't be writing off. But I also heard an interesting, and the economists here will have seen this stat, that the electricity crisis is costing as much as 900 million, well, 899 was the figure I saw, but 900 million rand per day. Now, if we think about what is that cost, okay, it's lost business, but it's also the cost of businesses supplementing the electricity. And something that did disappoint me in the budget, and I think it was clear that he wasn't going to be able to do it because it was a bit late that it was brought to his attention, but that the road accident fund levy, for which there is a rebate for mining and farming because they don't really use roads, was extended to manufacturing of food. But what about all the other businesses that are using generators and who are using diesel, which is getting more and more expensive, to keep themselves alive, basically, and they are paying tax effectively, which is increasing the taxes for SARS. So it's kind of, the government is actually scoring. They're increasing the electricity costs, and they're scoring by private enterprise having to supplement their own income. Now that's an economics question, and again, it's not really my field, but I just found it alarming that the figure is so great. And we've all heard I think it was the ShopRite Checkers, said they'd spent 500 million over the last 6 months. So all of that is something which will impact business and impact what it will be able to pay in taxes elsewhere. And I agree with, I think it was Hugo said the 125% write-off is a good help for the cash flow of those businesses. But if we just, and I'll come back to the tax, which is my field, we just look at, you know, how many companies are actually paying how much tax. And again, the stats are old, so they'll be even worse now, I would think. But there were around about 800,000 companies that actually pay tax in South Africa. Sorry, 800,000 companies registered, but only 24%, about 200,000 had taxable income. This was in 2019. There's only just over 381 companies have taxable income greater than 200 million. Thank you, we're a great team here, Dawie. Have greater than 200 million rands worth of taxable income, and they pay 56% of the corporate income tax. So again, if these problems are not sorted out, then our tax base will shrink further, because if these companies cannot sustain themselves, all the 200,000 small companies that are contributing and the 300 and odd very large companies that are contributing, we have to look after them, and we have to grow the number that there are, because there just isn't room for any more shrinkage, as it were, again, because of that tax base. And what concerns me is this cost of the electricity, and it has to be, as I say, I don't have the solution. I'm a tax person. I guide people on what they have to pay. The Economist can have given some input, but it really is worrying to me that we're, as I said before, projecting such large increases in tax when really the base is shrinking.
And can I ask Deborah on the tax collection side? So,
yes,
is the structure of our tax revenues with a high proportion coming from personal tax, followed by VAT and corporate income tax, is this a typical structure in other economies? Is there a structural issue, or is it just a matter of the number of individuals and firms?
That's an interesting question, and I have to confess I haven't looked at other countries specifically on this, but I do know that our own structure of the collection of income tax has changed over time. The proportion that was paid by corporates was a lot bigger, and the personal income tax level has increased over time. In actual fact, they're budgeting, in 2020 it was 39%. They're actually budgeting 35% to come from personal income tax. So they're obviously seeing an increase of the other taxes somewhere else, but it is too much. Listen, ultimately, individuals pay everything. I mean, whether it's the corporates or the VAT or the personal income tax, it all ultimately comes from the consumer at the end of the day. But it is skewed. It is much larger than it used to be. And as I say, the number of people are very small. And then the question arises, well, how are we managing to extract that amount of tax from that amount of people? And something that really does worry me is that in those 2020 stats, there was a statistic that said 23% of the taxpayers are actually over 55 years of age, and they pay 25% of that total personal income tax, which I found very alarming, because that means that our tax-paying population is actually likely to retire and stop paying tax, perhaps receiving monies through retirement funds, which will generate some taxes, but dividends, that's a much lower, capital gains, that's a much lower level of tax. So that's very concerning. And I think that's been, even though they've never really said it, I think it's been recognized by Treasury and Revenue in their, and if you want to call it, their stealth wealth taxes, because everybody always wants to talk about this, and I'm going to go there now if you'll forgive me, but everybody always talks about this annual wealth tax that will raise all this amount of money. Quite frankly, the studies that have been done worldwide show that an annual wealth tax is not the big pot of money that everybody thinks. We have wealth taxes, we have estate duty, we have donations tax, we have transfer duty, we have a securities transfer tax. Those are our wealth taxes. And they are very significant. If I just make a point, the 3.5 million rand tax-free on your assets when you die hasn't changed since 2007. Now, if you think of inflation since 2007, that means that many more people than would have paid estate duty in 2007 will be paying now. So then it's a question of, are we collecting the money? Because the tax authority was very slack for a long time on things like trusts and estate duty, but that has changed. We've seen Judge Davies go into revenue, and I think he's sort of put a firecracker up a number of departments, and they've now got this wealth, or they've had the high net worth individual unit, but it wasn't very effective. And it's now extremely effective, and people are receiving lifestyle audit questionnaires, which are being followed up, and they're apparently quite digging. But just to give you some insight into how these stealth wealth taxes have been working. So in 2011, the luxury car tax was introduced. Luxury cars are for the wealthy, not for the poor. So as you said, it's always pro-poor. Not that it should be helping the wealthy. We've got a very unequal society, but you know, we are. The point I'm trying to make is that the push for wealth taxes needs to stop. CGT inclusion rate was increased in 2016. The transfer duty was increased. The top level rate was increased to 13% in 2016. There was no relief until now. That's almost 7 years later. So 7 years later. The dividends rate was increased to 20%. That gets your retired people and anybody who's holding shares, which tends to be your retirement funds and your wealthy people. I'm just going to go through this. The taxes on trusts. They're being followed up, but B, now it's very difficult to give money to a trust without paying significant taxes, be it on an interest-free loan. What we've seen in the current budget is that what was happening with amounts being distributed to non-residents as capital gains, they were taxable. Other items weren't. They will now be taxable. They're closing that noose around the wealthy. The exit tax is obviously a big one. If people want to leave, they get seriously taxed, and it's prohibiting a number of people from leaving or tax emigrating. The VAT was increased to 15%. The marginal personal income tax rate was increased to 45%. The point I want to make on that is that people say, oh, well, you know, there's lots of places paying tax at 45%. At the current exchange rate in the UK, it's £150,000 that one is paying at 45%. That's 3.33 million rand. Here it is 1.8 million rand. So here you're a lot poorer before you start paying the highest rate. The high net worth unit was put in place and made strong in 2021, and now from 2023 the tax return is going to want people who have assets of more than 50 million to reflect their assets at market value, with a view to seeing if there's anything to tax. So these stealth wealth taxes have been coming in, and they are procuring, if I want to say that, along with the stronger SARS attack on wealthy people, they are procuring a lot more tax. So people will think it's coming from the commodities, but actually it's coming from a lot of this, that we've managed to increase taxes, but that is running out. I don't know where else that's going to come from. So I just wanted to make that point.
Thanks, Deborah. Introducing us to a new term, stealth wealth. I just wanted sorry, Deborah. I wanted to change tack a bit, but you know, and it's to a point that you made, Dawie. You said, you know, you're always being asked the question, is it a pro-poor budget? I imagine the members at the Cape Chamber of Industry will be asking a different question, which is this a pro-growth budget? I wonder if I could, take a round of comments about that.
No, it's not. But that's not the fault of the Minister of Finance. I mean, that is just circumstances and the reality that he's facing. So no, this is not a pro-growth budget. May I make a few comments on the things about the other panelists said? I will be quick on this. There was no increase on the fuel levy or the road accident fund, but the road accident fund is running a massive actual deficit. So not giving an increase for the road accident fund actually increases that actual deficit, actuarial deficit at the road accident fund. So this is like borrowing money from the future in any of it. So in a way, you should be putting that to your debt levels. I want to show this to you, if I may. There's a bit of a silver lining. It's difficult to find one, but here's a silver lining as far as I'm concerned. I think it's this graph. Can you see that graph? Can you see this graph? Okay, now what I've done, I looked at 2007 and I see how much electricity we used in 2007. Assume you use 100 units of electricity in 2007 and produce 100 units of the economy or GDP in 2007. This is what it was, 100 to 100. And see how that increased. So basically it increased to about 135 or so. What it basically means is that we improved. We're using much less electricity from Eskom, and not only are we using much less electricity from Eskom, we're using it much better as well. So that in a way is a bit of a silver lining. That's important. Then another comment what I want to make that I think it's worthwhile mentioning as well. Deborah, about the other countries and the different tax regimes that other countries typically use, and depending on what countries you're talking about, typically poor countries, they will tax exports because they're commodity exporters typically. And as they grow a little bit, the poorer countries are depend more on indirect taxes, like sales taxes typically. Sales tax and the value-added tax are a little bit complicated. So in very poor countries, don't really find that because it's a bit of a complicated system. But poorer countries typically rely more on indirect taxes. And as you grow wealthier, then you move the shift moves more to direct taxes like income taxes and so on. And that's where we are. South Africa is being taxed like a rich country in the world, actually. And then in terms of our tax regime that we have in South Africa. And then the last comment I wanted to make is on capital gains taxes. Capital gains taxes is an immoral tax. It is a wealth tax. It is a tax on inflation. It is a horrible tax. We have to get rid of that thing because that's why people work. They want to accumulate wealth. And now you're taxing, once they liquidate that, you're taxing the nominal increase on that wealth. It is just unfair and it is immoral. It's a tax on inflation. This certainly, and this is not the first time that we haven't had a pro-growth budget. We've had not a pro-growth budget. We haven't had the pro-growth budget in South Africa for many, many years.
Yeah. Hugo, do you want to comment on that?
Well, let me push back a little bit. So, I mean, what would pro-growth be? Pro-growth would be, for example, if you shift your expenditure away from current expenditure, i.e. paying salaries and wages, towards more capital expenditure from government side. That would be one way to judge whether it's pro-growth or not. The other way, I guess, would be to look at the tax system, right? So have we increased taxes or not? So we've just said to each other that we have not increased taxes in this budget. So you could make the argument that that is indeed pro-growth, the fact that we did not do that. And I mean, on the expenditure side, it's still massively dominated on the current expenditure side. We are, though, budgeting for much more on infrastructure spending over the next 3 fiscal years. Now, there the question is, will that materialize? That is always the thing. So it's so it's there. I mean, it's a big amount. It's 900 billion. Now, the 900 billion is not the big deal. The growth in the next 2 fiscal years is a lot on that public infrastructure side. So if we can deliver on that, then it would indeed be pro-growth. But I mean, I can't sit here and say that we will now. So I guess the one cop-out answer is, from that front, we will only be able to say in 2-3 years' time whether indeed this was a pro-growth budget, whether we've delivered on it. But so I would not be as negative to say that emphatically no, it was not. I'm not saying it's gonna shift the needle on growth, but I think the intent from Treasury, one, to not be increasing taxes in this poor growth environment, that is fantastic. You need to give a thumbs up for that. And then secondly, some intent to move expenditure more to the infrastructure side. That is another tick up, although the big caveat there is, can we deliver on it? And we've already mentioned that there is a big risk that the public sector wage bill turns out to be much higher than is currently budgeted. So then that will dilute my argument.
May I add to that?
Yes, I mean, can we talk a bit about the expenditure now? Is that what you want to comment on, Dawie?
Yeah, I just want to make a comment about the question about whether this is pro-growth or not. I would have been very happy if the Minister of Finance, he could cut back on state spending quite dramatically. Imagine he brings the fiscal deficit down to zero. He does that by cutting some spending somewhere. I can tell you the South African economy will go through a very, very deep recession if he does that, because he will remove all that state spending out of the economy, but that will be a very good thing. So it really depends on what you mean by that. So it will be good in future. So that's one comment I want to make. Pro-growth or not, it's a bit of a difficult question to answer, because if you do the right thing, you're probably going to force the economy through a recession. The second point that I want to make, and it hasn't been mentioned here, and I've put the numbers, I can show it to you if you want me to. The state is a massive destroyer of capital. What it basically means, they borrow long-term money and spend on short-term current expenditure. And if you do that, you destroy capital. The amount is roughly equal to approximately 2% of GDP. 2% of GDP is equivalent. That brings the savings down to about 13, correct me, Hugo, brings the savings down currently about 15, 14% of GDP. It brings it down to 13% roughly of GDP. That's the money available for investments, because the state is a massive destroyer of capital in South Africa, long-term money spent on short-term current expenditure.
Yeah, so I like this question and what it's prompting, and I want to talk about, because part of the issue is, so the way that Hugo has presented it is one of the ways of judging whether it's pro-growth is looking at whether you're spending on current expenditure or more capital expenditure. And I mean, this issue of the wage bill, Hugo, what is the forecast around that? And Dawie is painting a picture of almost that being an impossibility to ever reduce that from the budget. Do you share those sentiments?
Now, perhaps just to also come back to this, I'll try to answer that question just now. But this framing of pro-growth, Dawie is right that if we don't spend on salaries and wages to public servants now, of course, that's going to have a detrimental impact on growth this year, because you subtract all of that money out of the economy. So actually, the question on pro-growth is whether our fiscal policy in general, is it supportive of medium-term potential growth in the economy? Mm-hmm. It's not about growth this year. It is, what are we doing to boost our medium-term growth? And there, I think it's crucial to move away from current expenditure to current expenditure, because if I build a road, if Transnet improves their railway, if you borrow money to do that, at least you're saying that over time we're getting a dividend back in that. We can earn more exports from that, etc. Whereas if you borrow to pay salaries, I mean, that is a different kettle of. It's not obvious what your growth impact, your medium term or your potential growth impact of that is. So that's how I think one way to look at it. On the wage bill, so yes, I think many of us said there's no way that the Treasury will reach their number last year. Well, guess what? They have. But of course, every year that you give less than what the unions are demanding, you set yourself up for an even worse wage negotiation round the next year. And I think what is different now is, again, you are leading into an election of 2024. Government needs the unions on their side going into 2024. So I think the 23-24 wage negotiation is going to be quite rough. Dawie's mentioned the unions are asking for 10%. So I mean, I think, Dawie, the number is that the government is offering 4.9%. The 3.3 was for last year, or for the current fiscal year. The 4.9 is for 23-24. But still, there's a massive gap, right? There's the unions are asking for double than what the Treasury is offering. And then crucially, in the budget statement or the document, the wage bill. So, of course, the wage bill is the amount of government employees multiplied by what Treasury is expecting the wages to increase by. But that overall wage bill for 23-24, so the next fiscal year, only increases by 1.6%. So that's a very small increase in the wage bill that we are budgeting for 23-24. And there I'm in full agreement with Dawie. I think that 1.6% is under real threat. It may well be quite materially higher than that. The Treasury is certainly going to push back against that. Of course they will. But will they be, I always want to say, will they be allowed to? Also bear in mind that it was reported this morning that the unions are now planning a strike, right? From the 6th of March, they are at this stage planning an indefinite strike. We did not see that last year. So if indeed we have a public sector strike, depending on how many people participate and how long it lasts, unfortunately, unless you are Noel Froneman at Sibanye and you say, well, to hell with the unions, not to hell with the unions, but we are not going to capitulate. We will sit through a month-long strike. I suspect in the public sector, we will not see that. So if you do have a prolonged strike, I'm afraid then we're probably going to end up with that wage bill being higher than what is currently budgeted for.
And Hugo, you mentioned another spending priority, which is infrastructure. I mean, my concern here is how is this infrastructure going to be spent? Is it through the same SOEs that we are recognizing as being having all these challenges? What are your comments on the infrastructure spending as a priority? It came up. My colleagues here at the Cape Chamber tell me that they recently ran a business environment survey, and one of the most important issues affecting respondents' members was infrastructure spend on transport. It's not clear whether that's just the potholes or more substantial spending to expand transport infrastructure. But this is a huge issue for business. Are we seeing this issue being addressed accordingly?
I suspect the chamber members are talking about roads, but I'm pretty sure they're also talking about the Cape Town harbour and to improve efficiencies at the harbour. We know there's been big issues there. And then broader, it may well be railways also, although I guess in the Western Cape that may not be the biggest challenge. That may more be on the coal line and the iron ore line. But nevertheless, I think it is logistics in a broad sense of the word. Certainly we need better, more CapEx. And of course, CapEx does not just mean that you build more stuff, right? It means that you maintain existing infrastructure, and that's also been a challenge. Look, I mean, ever since President Ramaphosa came into office, we've been hearing about infrastructure, and we have an infrastructure office in the presidency. There are so many institutions that deal with infrastructure. We have the IDC. I mean, you can name a whole list of people that are sort of tasked with infrastructure. But you're not seeing it in the numbers, right? If you look at our gross fixed capital formation numbers, this has been the poorest part of our post-COVID recovery. If you look at the demand side of GDP, the capex side has performed particularly poorly, and it's mainly been the public side of it, so the SOEs and general government. So let's just quickly split this up. So public capex is the SOEs, which would be Transnet, Eskom, the road agency, etc. And then you have general government fixed investment. So those would be your national departments, your provincial departments, but also local authorities, municipalities, for example. They all fall under general government. Now, on the general government side, there are, of course, significant constraints in terms of capacity. So these authorities, they have a capex budget, but they have not been able to spend the money, whether it's been through poor project management or planning, execution. It's not obvious that constraint can be turned around in the short term. So I think, before, again, in the run up to the election, you may well see a bit more movement there to show concretely that we are working on service delivery, we are fixing potholes, etc., etc. But that is a real constraint. So I don't think it's on the local authorities side. I don't think money is necessarily the problem. It's a so-called bankable projects being identified, and there are many of them, but to execute on that. On the SOE side, it is a money problem, right? It is a balance sheet problem that Eskom, Transnet, you can name all of them. They have significant constraints on their balance sheet, which inhibits the capex side. And again, that comes back to the point of why it was crucial to take over for a number of reasons. But the one is to take over Eskom's debt to I almost want to say unlock funds so that they can do more on the infrastructure side. So there's lots of plans, initiatives, but as I say, we're actually still waiting to really start to see it show up in some of the numbers. Perhaps just the final point on this, at the BR, we do a number of quarterly business surveys. One of these surveys is in the civil construction industry. And if you look at how low confidence, it's starting to pick up, but how low the level of confidence remains in the civil construction industry, you actually don't have to say anything else than that. It shows you that not a lot of tenders, for example, are actually starting to move. So these projects have not been put out to tender and been adjudicated as yet. We're waiting for that, and I think there will be more. But we can't say at this stage that we've sort of embarked on this big infrastructure drive.
Thanks, Hugo. Prof. Tickle, I want to ask a question and change tack a bit here. So, there was a debate earlier about what our GDP forecast is, 1%, 0.9% or less. And one of the factors that may contribute to this is the grey listing of the country by the Financial Action Task Force. Could you describe to us your understanding of this and what potential impact this will have on the economy and financial flows?
I can. Obviously, the economists will have to supplement what I say. But essentially, the Financial Action Task Force was put in place by the OECD a number of years ago to try and reduce crimes through money laundering. And what was developed was a framework of what was required for the monitoring of financial flows in order to prevent that. So what happens is the Financial Action Task Force go into various countries and do what they call peer reviews and establish whether the checks and balances in place are sufficient to counter the money laundering type flows. And I mean, I understand that we have a bit of a reputation as South Africa for being a place where people can go and launder their money, which is rather sad. But I mean, we have had quite good banking systems, but it wasn't enough. So the Financial Action Task Force said, these are the things that you need to do. And there has been quite a mad scramble to put in place laws to increase the governance of our money flows. So you'll see that whereas it used to only be banks that had to report cash inflows, now they're saying that it must be also, for example, estate agents, and there are a number of others. The impact on South Africa, and there's various different views on this, but it is more sort of a restriction on South Africans who want to move flows or funds outside, and then it will require a lot more red tape for monies coming in, because obviously we will have these rules in place. But where monies are coming in from a country that is used to having strong governance, then that shouldn't really be a problem. But what we're finding with South Africans putting money out is that a number of countries or a number of banking institutions are saying they either don't want to deal with South Africans at all, or their requirements of the information that's required, where's the money come from, where do you have tax numbers, where do you pay tax? There's let's say it was 2 pages before, it's now 10 pages. They will want a lot more information from South Africans in order to feel comfortable that the people they're dealing with are people who are worthy of being dealt with by their bank. So I guess that the impact, there is going to be an impact on the economy. A lot of and again, the economists are much more qualified to speak about this, but what I've heard is that a lot of the impact has already been factored in. That sort of, you can see our rand, you can see our, the share markets. But yeah, it's difficult to see. I mean, it's not a place we should be. We should have dealt with it long before. It's a lack of planning. It's like everything else. We should have had the plans in place. We should have put the required laws in place long before we got to the point where they were threatening to put us on the grey list. And then we wouldn't be there. But unfortunately, that's just a function of where we are. I almost get the feeling there's some kind of analysis paralysis in our institutions these days. It's just, everybody's trying to do something, but they fall over their own feet, and it doesn't quite get there. And we've just talked about infrastructure, and Hugo mentioned the municipalities and said, there is enough money, but they don't seem to be able to spend it. I mean, that's a very sad reflection on where we are, and I think it's throughout the institutions. But as I say, I'm not really the right person to ask this particular question. Perhaps I can hand over.
Are there any other comments from the other panelists on this issue, the grey listing?
Can I give you some practical examples for this? Because this is what I do. So I take I assist my clients to open bank accounts and share accounts, and I do this. And before I am allowed, because I'm a financial services industry, before I'm allowed to open a bank account, think about yourself. You want to go to a bank, you have to provide the so-called FICA documents. You have to show them where you stay. You have to show your personal information, your ID document. You have to show them your income, and you make a big deposit. They're going to ask you all sort of questions, even as it is. Now, what happens in practice is that an international bank, when you're on a so-called whitelist, as an example, they know that we're on a whitelist. And if I open a bank account for a client at an international bank, they're going to say, listen, this is fine, because they know the money is coming from a bank that is in a country that's on a so-called whitelist. They do their job. Now this bank says, listen, but I can't trust you anymore because you're on a grey list now. Now I want you to jump through a couple of extra hoops here. And my clients get very, very angry at this, because I ask them for more and more pieces of paper, and we're building a bigger paper tiger here, and I lose business in the process. That's a good example. So essentially, there are 3 places where it impacts. The one has to do with international trade, money flowing in and out of the country. The second one has to do with international capital flows, money flowing in and out of the country for investment purposes, as an example. And the third one has to do with internal money flows, because now the banks in South Africa are trying to jack up their own act, And that means that they're forcing other banks in South Africa with which they are doing business, as an example, for other financial institutions to jack up their act as well. So it's just a huge, actually, it's just a huge schlep. That's what it is. And quite often, the banks, international guys, they will say, listen, I don't care. I just don't want to do business with you. That's it. Go away. That's it. This is too much of a trouble for them. I understand why. My clients complain as well.
Thanks for that. Hugo, any other comments on this? No. No,
I think it's been dealt with. Thank you.
So I wanted, it's 1:55. We have 35 minutes left on the call. I wanted to open it up for questions and comments from the audience of Cape Chamber members. You're welcome to come in here either through the chat or by raising your hand virtually on Teams. There was one comment a little bit earlier. I think this was on the discussion, Hugo, we're having around infrastructure. It comes from John Lawson talking about, I think, the findings of the Cape Chamber study talking about rail freight, cost of passenger transport, rural roads. Will SOEs get it right this time when wasted money? When they've wasted money before? I think more.
Well, this is the question, right? I mean, I certainly don't have the answer. I mean, I've spoken about Eskom, so I think, and not to repeat everything, but I think Eskom is now in a better position to deliver on that. So the proof will be in the pudding. But yeah, so we've got Transnet. I'm not sure. I mean, Transnet is becoming the next Eskom, right? I mean, their failures or their lack of maintaining those rails and ports are now starting to seriously dampen our export revenue, and by definition, I mean, that has fiscal implications. It also has growth implications. So I'm not sure what the story at Transnet is and how confident we can actually be.
I don't see any questions coming up. But as we're waiting for any questions from the floor, what of the John. John, please unmute yourself and turn on your camera.
There we go.
There you go.
I just want to thank the panelists. It's been really interesting conversation. Dawie, I think it was you who suggested that the finance minister was looking and suggesting privatization will take place and that the policy of the government is maybe inconsistent. Could you maybe share your views in terms of what is likely to unfold? Will Treasury actually be able to shift the direction? Can we believe these promising signals that are being or that you have seen, or do you think there'll be a U-turn? Maybe just comment on that, please.
Yeah, John, no, don't misunderstand me. This is not the privatization policy, not at all, whatsoever. No, what is happening here is that the state is simply collapsing everywhere, and because the state is collapsing, the private sector is taking over many of those functions. And the private sector is just doing it. Let me give you one example. We have another example, perhaps. We have more than 3 times as many private sector security people than police people in South Africa. We have actually privatized the police in South Africa. The same goes for education to an extent and all that. So it's not a matter of change in policy. I mean, ideologically, the ANC is a so-called developmental state. Believe in a developmental state or socialist, or they've got a bunch of communists there. And so ideologically, this is not a government that's supposed to privatize anything. The reality is just that because the state is collapsing, the private sector is just taking over. And so the question that you're actually asking, are we going to see suddenly an improvement in efficiency and the capacity of government? And I don't think so. So this process of so-called privatization is going to continue. So it's not a policy change, it's just the reality catching up with ideology, I guess.
But I think the challenge here, and maybe what John is touching on, is the fact that there's a particular policy around SOEs, and they are regulated and enabled basically as monopolies, unlike, for example, security or education, where there's access. And then the other point, it speaks to what Hugo was saying, is there's these conditionalities that National Treasury is supposedly going to impose onto Eskom for this debt. Do those conditionalities play a role in actually disciplining and
Yeah. The conditionalities. John, you wanted to say something before I answer?
Yes, please. So we're paying double for the same services. So we pay tax so that the police can function, and we pay for private security, and then businesses pay for a third time to fix the damage from theft and crime. So based on our business environment survey, it's maybe 5 to 6% of turnover, the cost of crime, and the fact that it is not safe. Now, you can imagine we add that 6% to the bottom line of the pyramid, how many businesses become more viable, etc. Is there a case to be built to shift it and get the policy change that we need?
No. I think this is what we're talking about now, is the efficiency of the state. Basically, that is just an efficiency question. But I think South African Airways, and this is my prediction. This is what I think is going to happen to Eskom. South African Airways. They're planning to privatize this, and again, they gave it another R1 billion or whatever. Nothing is happening to South African Airways. This so-called partly privatization thing has been going on forever. South African Airways is not flying, but the private sector is flying. That's an example of what I mean by the airways having been privatized. Another good example is what's happening to, I'm laughing, sorry, I shouldn't. What's currently happening at Post Office. The minister mentioned in his budget speech he's going to fire 6,000 people working at Post Office. They fired just about all the people working at the South African Airways. They're in the process of firing people working at the Post Office and closing down a lot of post offices, actually closing it down. It's a bankrupt. It's not a company. They pretend to be a company. It's like Eskom. It's also not a company. It is a subdivision and a department somewhere. They call each other directors and CEOs and chairmen. It's not a company. Let's get that straight. It's a thing that is being kept alive by the private sector. The same is going to happen to Eskom, is that slowly this thing is going to die. Slowly it's just going to die, like what happened to South African Airways. Like what is happening to the Post Office. Now, the bad thing is it's very damaging when this happens, because you get people like Gweri Montage say, listen, no private sector generation. Okay. You can generate 10 megawatts. Okay. Now you can generate 50. Now you can generate 100. And now you can generate as much as you like. So, I mean, he gets pushed all the time because that is the reality. And that is what's going to happen. I think Eskom is slowly going to die. And it's going to be a very painful process. It can happen so much easier and cheaper and much more efficient, but they're simply preventing the inevitable from happening all the time. But when it comes to it, they wouldn't have a choice but to allow the private sector to take over those functions. And that's exactly what is happening to Eskom at the moment.
Can I add something?
Yes, you're welcome, Professor Tickle.
Yeah, I think we have to put sort of the doomsayer view on the table as well, which was raised in the Davies Tax Committee Wealth Tax Report, in that if we actually look at how many of us are privileged to pay tax, even if we're not happy where it's going and that we're paying twice, the reason why we were happy to pay tax was because it was going to the other, if we say there's 5-6 million people who are taxpayers and there's 300 or 800,000 companies, it was supposed to go to the other 55 million to give them some form of, albeit fairly basic, but decent policing, health, education, etc., etc. Now, they are not getting that. So the doomsayer view is that there's going to reach a point, unless things change dramatically, where those people are going to have had enough. I mean, just like we've had enough of load shedding, that's a great inconvenience. Some people have not had electricity for years, or water. So we have to sort of recognize that if something doesn't change, we're going to have a very well, I'll tell you, I think the South African people are amazing because they're so patient. I'm surprised we have not already had much more than a looting 2 years ago, basically a form of civil war. And I worry that it's on its way unless something changes. And I think Treasury does kind of recognize that, because it has tried to help the companies a little bit. We've talked about the individuals, but you know, the tax rate is going down 1%, big deal, but at least it is going down slightly this year. The small business tax table has been altered finally, yet again. There is this move to try and help businesses to buy their own electricity with the 1.25%, 125% write-off. But there's only so much they can do. I mean, one of the things that really worried me last year was that SARS, in its wisdom, tried to remove a provision or a practice note which said that if you receive, if you're not a money lender and you pay interest, you're allowed to deduct that interest to the extent that you receive interest. And they tried to remove that because it doesn't really fall into the legislation. That would have had a huge impact on many, many businesses that receive and pay interest, and presumably individuals who are perhaps renting, renting property but haven't funded it quite directly as they should have. Treasury has turned around and said, no, we need to put some legislation in place to allow, potentially to allow this to happen. So the private sector, I can't remember whether it was Hugo or Dawie, the private sector is stepping in, and it has to, because otherwise what we're facing is really quite dire. And it's very sad to me that it's been allowed to get to this point.
Hugo, your comments? Or?
So Deborah talked about a wealth tax by stealth earlier. So, I mean, and this adds to what Dawie has mentioned. I mean, in some of these SOEs, we are now moving towards, let's not call it privatization, but we are being, government is being forced into allowing more competition simply because these companies are failing to such an extent. So I think the developmental state has not gone away. This government still clearly wants some form of SOEs, but I think at least there is in some parts of government some pragmatism that has stepped in, not because they want to, but because it's such an abject failure that they are now starting to allow more private sector participation. So, I mean, we know there are very, very big reforms going on in the broader electricity sector. Break Eskom up in its three parts: transmission, distribution, generation, and bring competition in on the generation side. You then have a transmission company that's on its own, and it can then buy power from whoever generates it at the cheapest cost. So these are, I mean, these are massive reforms, right? We still have to follow it through. But so I think, you know, over the next 5-10 years, our electricity sector is going to change quite dramatically. And Dawie may well be right that in 10-15 years, we don't have, well, we certainly, what we know is we're not going to have a vertically integrated Eskom as we have now. It's going to be split up in different parts, doing quite radically different things. So it won't be the same beast. In Transnet, they are now trying or starting to concession off certain railroads. They're looking for investment from the private sector into ports. So these things are certainly starting to happen with more private sector involvement starting. But again, it's not going to fix things over the short term. But it is certainly a move in the right direction. At I think the fundamental point is we want less of these very large inefficient monopolies in South Africa and more competition in the transport sector, in the energy sector, and I think that that will certainly be a very positive development if we get there, but we still need to get there. And I mean, and again, I think it's going to take quite some time.
Thanks, Hugo, and to the other panelists for responding to John's question there. I don't see any other hands. Are there any other hands from the audience? If not, the one topic we haven't gone into in detail is it was mentioned, the potential for the COVID grant to become permanent. Could you just reflect on that, and what are the implications of this? I mean, is this now potentially going into a basic income grant type situation, and what are the implications of that? Could I ask Hugo, if you don't mind, making a comment on that?
So again, I have to agree with the other panelists. I mean, it is inevitable that some form of, they may not call it the SRD or a social relief of distress grant, but that some form of additional social protection becomes permanent. And why do I say additional? Of course, we already have the old age grant, we have the child support grant. So these are massive expenditures that are permanent expenditures. Then we brought in the SRD grant to say, okay, there are certain parts of the population that fall outside, unemployed people that fall outside of the existing grant system. We need to be supporting these people as well. Now, this grant was initially just in 2020, but as we know, it has been extended the whole time. It's never going to fall away. It's just politically not possible. And to Deborah's point of a potential social revolution in South Africa, of course, the one way that you prevent that is to continue to hand out goodies to people. Now, sorry, I should not be calling it goodies. These are necessities, right? These are literally keeping people sometimes from starving. So you can't take that away ever. I mean, preferably what we need to do is to create a business environment where low-skilled people can be employed into the formal economy as opposed to paying handouts. But again, that is also not going to happen over the short term. Okay, so to come back to your main question, currently, the budgeting that we saw last week in 24-25, so in other words, from April 24, this grant is budgeted to fall away. So Treasury is not assuming that it continues in their budget, which, as we've said, that is highly unlikely. Some form of it will continue. So that social protection, that big amount, it's more than 200 billion rand per year, that declines by 7% in last week's budget. It's not going to decline by 7%, right? So the point is, you are talking about 35 billion rand that is not in the budget framework from 24 onwards that will be there in the end. So then, of course, the question is, okay, so are we just going to add that to expenditure? Well, not quite. So Treasury is not stupid, right? Although it is not in their main expenditure framework. Well, sorry, it has not been allocated. They have started from the last year or so to include in the expenditure line a so-called unallocated reserve. So this is funds that they've not allocated it to a specific expenditure line item at this stage, but they think they want to have something in the kitty. This is in addition to the so-called contingency reserve. So we always have a contingency reserve around 5 billion rand. So let's say there's a drought and you need to pay farmers compensation. You have this contingency reserve. On top of that, they now have this unallocated reserve, and it's a big thing. It's like 40 billion rand per year from 24-25. So to an extent, Treasury is already saying to us, okay, we think there are big expenditure items coming. That's not in we haven't allocated it, but we are making provision for that. So I think that is very sensible. Given what we've said, that these things are very likely to materialize. Now, of course, the reason why they are not putting it in social protection at this stage is, of course, because the decision hasn't been made, right? There hasn't been a government decision. All we know is the SRD has been extended until March 2024. We are all assuming that it will continue, and again, I very much think it will. So in our baseline numbers, we have it continuing. That's why our fiscal numbers look perhaps a bit weaker than Treasury. But again, it's not like all of that, if it does materialize, will be new expenditure, because they are making some provision for it. Thanks.
Yeah, thanks, Hugo. Just a comment from John here saying 45% of our population is not adding value to GDP. India guarantees all unemployed 100 days of paid work if they improve their skills. Can we not resort to smarter social grants rather than this kind of basic income grants approach that we're taking? I think it's a great comment from there. Dawie, I see you've made a comment in the chat here.
I'm back.
Okay.
I'm sorry, I've got some internet issues here, so I just have to fix that.
Oh, okay. Do you have any comments in response to this discussion? Did you hear
to the basic income?
And you know, is this the right approach? Why aren't we being smarter in terms of social grants instead of just giving people transfers? I mean, this is really where we seem to be going, is we're giving people transfers.
Yeah. All right. Just a few comments about that. The one is that when you have 30 million people receiving grants, nearly half of your population receiving an income from the state, that's a sign not of a good social security network. That's a sign of something seriously bad in your economy. That's what it means. Secondly, I don't think we can allow fellow South Africans to go to bed hungry. So I think we have a responsibility as South Africans to support these people. But, and I think Deborah has been pointing this out as well. What I have done, I have calculated the redistributional effect of the fiscus in South Africa. What it basically means, I brought it down to a family level. So if you're a family earning so much money, how much money you pay income taxes, for example, how much VAT you pay in company taxes and all that. And depending on your income, what do you get back from the state? Education, if you're rich, you've got to send your kids to private school and own private medical services and so on. So based on some assumptions. So I've done it myself. Now, I can tell you that the fiscus in South Africa is probably the most redistributive fiscus in the world, which means that the guys doing the paying are not the guys receiving the benefit from the state. Now, this is important because ideologically it's important, because if you look at Nordic countries, for example, they have very high levels of tax as well and high levels of state spending, but redistribution is very, very low in those countries. And of course, the only way that you can get, and part of the reason why we have that is because of the high levels of inequality in South Africa. And the only proven way to reduce inequality in any country is to grow the economy. So it comes back to economic growth again. And I'm afraid the kind of measures that we're putting in place in South Africa is just not good for economic growth. So what I think a government is planning to do, I think you're not going to give 10 million people a grant and take it away 3 years later. It's just not going to happen. So they will continue with this COVID grant, but I think it will morph into something else. And I think the idea is to include it eventually and to sort of include other social security expense item in this one package. Things like, for example, health services with the NHI will form part of this broader, let's call it broader basic income grant, including access to health services and so on. I think that is the idea with government. And talking about the NHI, perhaps there was very little said about the NHI in the budget of the Minister of Finance, which I'm actually quite surprised about, because that is one of those hobby horses of the ANC. But I just want to make this comment, and we've been talking about the inefficiencies of the state, but there's something good about having an incompetent government, and that is that they can also not implement a bad idea. But so that perhaps is a bad thing.
Okay. We reaching towards the end of our time. It's been a very rich and fascinating discussion. But I want to make sure that I give each of my panelists an opportunity just to make some closing remarks before we close. Professor Deborah Tickle, just 2 to 3 minutes of your closing remarks and anything you want to share with the Cape Chamber members.
Yes, I think I started off saying that I was disappointed with the amount of projected debt increase because of the amount of interest that results in and the amount that then takes out of the tax income. And as I've been listening today, all I'm seeing is that there's things that are missed out on the expenditure. For example, the basic income grant, perhaps we need more for infrastructure, which all that tells me is that assuming we can't increase the income, and as I said earlier, I don't know quite how we're planning to get from 1.6 trillion to 2 trillion in 4 years. All that says to me is that we're going to be increasing the debt likely a lot more than is projected, which is of great concern to me. There may be one area that Treasury is hoping will yield some taxes that we've not really factored in, and that's these international initiatives, what they call the Pillar 1 and Pillar 2. And the Pillar 1 is aimed at the digital, although it covers a lot broader, it's ended up covering a lot broader, sort of digital companies that operate in our country but pay no taxes because it's all sort of in the cloud, if you want to call it that. And then the Pillar 2 is a minimum tax. So if companies in South Africa are operating elsewhere where the tax is less than 15%, then it would essentially potentially give us the difference between 15% and that amount. And those two pillars are, well, the Pillar 2 allegedly is going to come in at the end of this year. South Africa probably won't be quite ready to bring it in, but it was stated in the review that it's being looked at and legislation will be put in place. And the Pillar 1 is a lot further off, but eventually will either be replaced by what they call a digital services tax, or it will come in, because the Americans don't like the digital services tax, and most of those companies actually are in America. So maybe they've just not told us that they're seeing this windfall that might come from these international taxes, but how much that might be, who knows? Presumably they've got the capability to assess some of that, because they do have the knowledge from information that's coming in on what they call the country-by-country reporting, which is a transfer pricing report that they receive from international companies. So I don't know, but let's just put that aside, because that's a maybe. And I suppose my closing remark is that, yes, we were all thrilled on the day that no more increase in taxes, etc., but I don't think the picture is quite as happy as we initially thought. And I think that's really come through during the course of this discussion. So thank you.
Appreciate it, and appreciate your inputs, Professor. Hugo, your closing remarks?
Very much similar to the Prof, and perhaps to phrase it a bit differently. So we've been pleasantly surprised, actually, how some of the fiscal numbers have panned out the last couple of years. But we must just be clear that we have spent a lot more than we budgeted 3 years ago. Spending has gone up. So the fact that the numbers have turned out better is not because we've spent less. We've actually added a hell of a lot of spending, but we were able to do that because of these very large revenue windfalls. So again, to Deborah's point, we're on this trajectory, right? We continue to spend more. We're being bailed out on the revenue side. If we are saying that these windfalls are not continuing, and we've already flagged risks on the expenditure side, it comes back to Deborah's point that there is a risk here that if we look at these numbers in 2-3 years' time, that they've turned out to be quite a bit worse than is currently budgeted for. So I guess, the implication of, so what's the implication of that? The implication of that is that long-term interest rates, which are important from an investment perspective, the steepness of our yield curve, the rand, for example, that these, if we just take the global factors out, if we just look at our domestic fundamentals, if the story I'm telling does pan out, it of course does not bode well for our long-term interest rates and the outlook for the rand. Of course, the rand can fluctuate dramatically over the short term, but if you take a medium-term view on, for example, on the currency, it would be one factor to suggest that it probably remains on a weakening trend overall. Thank you very much.
Thanks, Hugo, for that insights. Dawie, to close off with you, your closing remarks.
Yeah, slightly different. Everything has been said, I guess. So let's see if I can give a bit of a different angle to close this discussion. I think it's important for us to understand that there are some underlying trends and forces in all economies. And an obvious trend and force that has accelerated recently has to do with this, let's call it the more advanced part of the economy, the tertiary part of the economy. And that has to do with things like technological advances, and it has to do with things that digitizable stuff and so on, and more things happening in that part of the economy. It's typically part of the service industry, and we are a part of that. So the point that I want to make is that economies are not agricultural economies anymore. They're not around mining and agriculture. They're not even centered around things like manufacturing. Economies today are centered around service industry. And if you are, very importantly, if you have the necessary skills and you are safe, South Africa is a very dangerous place. So keep yourself safe, physically safe. And you've got a good internet connection and the skills and a proper computer, not like my internet that keeps on going off all the time, then it doesn't matter where you are. It really doesn't matter where you are. And that's the good news story, in a way. So South Africa is a wonderful place to be, with wonderful weather. Still the best steaks in the world, a nice brandy and Coke. You guys down there in Cape just got a lot of wine. So it's really good. And it's nice to stay here, and as long as you're physically safe and you've got all those other things, you can still be part of a modern economy. The really terrible part for me is that there are so many fellow South Africans that don't get those skills, and they're going to be left behind, and they're not going to be part of this modern, wonderful, amazing economy that the world is moving into. And I think if there's anything that I would do if I was in a position of power, I would put so much more emphasis on primary education. Primary education is by far the most important. So that's just my final comment. Thank you very much for the invite.
Thank you. Well, we've reached the end of our session, ladies and gentlemen. Thank you so much for your attention over the last 2 hours. A very informative and wide-ranging discussion. There's been a lot of positive comments on the chat. And I see one of the guests, Peter, has even said, can the 3 panelists please go into the President's Advisory Committee? So if that's one of your career prospects, please do. I think it would be a great asset to the country to have you, the 3 of you, in that kind of a role. Thank you so much to the Cape Chamber for hosting us, and enjoy the rest of your afternoon and week. All the best.
Thank you. Bye.
Thank you. Goodbye. Keep well.